Do you know what your number one expense is as an artist trying to make a full-time living with music? Well, I can tell you what your second is, and it's not rent, it's not your mortgage, school loan, or groceries, it's taxes. And honestly, I didn't even give a rip about politics or taxes until it started seriously affecting my life. So I wanted to share some priceless information from Carlton Dennis, who's a tax strategist, regarding Kamala's proposed tax policies. As creatives, we can't just bury our heads in the studio and making music and pretend that this doesn't affect us anymore. We need to get out and vote because it makes a difference. So let's jump into this and make sure you stay to the end because I want to share what your number one biggest expense is.
Here's proposal number one, taxing unrealized capital gain. Kamala Harris wants to tax unrealized capital gains for the wealthy, and President Biden originally proposed this, but Kamala has announced that she also supports this idea. If you do not know what an unrealized gain is, it's a hypothetical profit that you might make one day by selling a capital asset such as a stock or a piece of real estate at a higher price than what you originally bought it for. So let's just say, for example, if you bought Apple stock at $200 and it rose to a price of $300, you would have an unrealized gain of $100 if you never sold. However, you would only realize the gain if you sold it, thus locking you in on the $100 profit. But by taxing unrealized gains, Vice President Harris would be taxing fictional profits that you don't technically have yet in your possession. Remember, the price of assets like stocks, precious metals, real estate, bonds, they don't always go up. Sometimes they go down. So yes, you might have to pay capital gains taxes on assets you actually lose money on in a Kamala Harris presidency.
Now, before you check out and think that this doesn't affect you, I want to explain how it does, especially when it comes to selling your music catalog. Capital gains taxes significantly affect artists when they sell their music catalog because the proceeds from the sale are considered a capital asset, similar to selling real estate or stocks. Here's how it matters, okay? If an artist's catalog has grown in value, the difference between the original value, right, what it cost to make it, and the sale price, that is the taxed capital gain. Now, a lot of artists are selling their catalogs because typically the capital gains tax is lower than the income. And normally, let's just say you're making $10,000 a month or $120,000 a year from your music catalog. Normally, when you would sell your catalog, you would get like an 8 multiple. Okay, so let's just say 8 times 100,000, so you get $800,000, right? And so you would be taxed basically based on capital gains. Can you imagine if these tax plans tried to tax our gain that didn't even exist when selling our catalog? I never trust the government. Let's keep going.
Taxing unrealized capital gains is an extreme departure from current tax policies, which only taxed realized capital gains. It is important to note, however, for now, this tax proposal would only apply to families with a net worth above $100 million. Under the Biden-Harris tax proposal, families with this amount of wealth would owe up to 25% in taxes on unrealized capital gains, depending on the tax rates they are already paying. They will owe a 25% minimum tax that includes unrealized capital gains. Now, why are taxes on unrealized capital gains concerning? I know some of you out there are probably thinking, I love Kamala and I don't care if she taxes unrealized capital gains because this will only apply to the ultra wealthy. If you fall into this category, I got some news for you. Regular income taxes also started out as applying to the ultra wealthy, but I'm guessing most of you watching this video currently are paying income taxes even if you're not ultra wealthy. When income taxes were first put into place in 1913, they originally only applied to the top 1% of Americans. Then, once the government got people used to that idea of income taxes, it started applying income taxes to the vast majority of workers in America, not just the top 1%. So if you think that taxing unrealized capital gains will only ever apply to just the top 1%, you might need to think again. If they get approved for families with over 100 million in wealth, it could very easily be changed to families with over 1 million in wealth or 100,000 in wealth.
Is that not insane how they slipped that in there? So they started with the ultra rich only paying income taxes, and then they lowered the threshold and lowered it to now everybody is paying income taxes, and it's just normal, and it's our duty, and it's for the roads, and it's for this, and they spread this lie, right? While really all of us should be doing everything we possibly can legally to avoid paying taxes. taxes. So that's really knowing what you can write off in your business, knowing what you can pay yourself, if you can pay family members or pay your kids, right? So that you can lower your taxes. When I first got my job, right, and I started making all this money, I just finished graduating high school or college. I made all this money, and then somebody did my taxes for me, and then all of a sudden I got this massive tax bill. And I know we didn't write off my car. I know we didn't write off a portion of my home that was used for my business, right? Like now that I live in this house, there's a portion of it that we write off. So we write off a portion of the mortgage, a portion of the property taxes, right? Certain expenses are considered research for music and what I'm doing. My cell phone is a write-off. My internet is a write-off. But if you don't know these things, you're going to end up paying way more to the tax man than you should be, when really we should be doing everything we can to keep more, so we can do what? So we can invest it back into our music, into our dreams, and live the lifestyle and have it for our family.
Under this policy, the government would force you to pay taxes on money that you actually haven't made. If the government can force you to pay taxes on money you haven't made yet, where is the line for what is able to be taxed? Will it force you to pay excise taxes on cars you haven't bought? Will it force you to pay sales taxes on items you haven't purchased? Will they force you to pay property taxes on properties you don't own yet? Where is the line at? Another concerning thing about this tax policy is that it does not appear to include a tax refund for unrealized capital losses. It seems only fair to me that if the government is going to tax unrealized capital gains, it should also refund unrealized capital losses.
So to break that down, if you bought Apple stock for $100 and it goes up to $150, they tax you on that gain. But if that same Apple stock you buy for $100 and it goes down to $50 and you lose basically 50% of your money, you should be getting a refund, but he's saying they're not. This is insanity.
Let's move on to Kamala's second tax proposal, because the capital gains one got me pissed off. The second proposal is raising the corporate tax rate. Kamala Harris also wants to raise the corporate tax rate from 21% to 28%, which is almost double what Donald Trump is proposing. Now, if you are a business owner, you could expect to pay significantly more in corporate taxes if Kamala Harris is elected and if the tax proposal goes through. Now, this is another controversial issue. A lot of people believe that raising corporate tax rates is a good idea because it forces successful corporations to contribute more to the federal government's tax revenue. Kamala Harris has been arguing that this will help to reduce our national deficit, which, if you are unaware, has gotten insanely out of control. Currently, the United States national debt is $35 trillion and counting. Again, the problem with raising taxes as a solution to our government's financial woes is that it destroys some of the incentive for people to create businesses in the first place. The less money that business owners get to keep, the less motivated many people will be to start businesses, to innovate, to create new jobs, and just to keep the economy going. I've said this so many times in other videos. Raising taxes is not the only way to fix the country's financial problems.
This is one of the things I never understood as a kid growing up, because the mantra in public school was striving together to reach our potential, right? So to try and make as much money as you possibly can. But why would I want to make more if I'm just going to get taxed? Like, there's these certain thresholds, and once you hit a certain threshold, you get taxed at such a much higher rate, right? So this is why we create corporations. Like, I know in Ontario, Canada, I think the tax rate is about 13% inside a corporation, right? So you create these corporations, so you're making all the money in there, and then you just pay yourself as little as possible so that you're not taxed on it personally, right? But like, if I'm just going to get taxed and they just keep raising the taxes, it's not going to incentivize me to want to make more. And what he was referring to as there's different ways to create taxable income was where Trump is talking about those tariffs, which maybe I'll make a video about that later on. But there's more than other ways to make money for the government other than taxing the people for trying to work harder. Like, it's so messed up in school, college. They want you to be successful. And it's like, yeah, go work hard, work hard, work hard. And then they punish you for being successful. And they don't teach you anything about taxes. Like, if you have not read the book Rich Dad, Poor Dad, I really encourage you to read that. Grant Cardone has a ton of videos about lowering your taxes and using that through real estate and whatnot. And of course, Carlton Dennis here, who I've sharing all his content, is a freaking genius as far as lowering your taxes and all these different tax strategies that are all legal so that we're keeping more for our family and for our dreams. Now, before I share with you what your number one biggest expense is, because we know your second biggest expense is taxes, I encourage you to get out and vote. You know, Trump has got my vote because of his ideas with taxes and lowering taxes, his policies on the border. He's the most pro-life president, free speech, so many different things, and we can agree to disagree. But here's the thing, no matter who gets in, you want to keep investing in your brain. You want to take care of your family and not get caught up in the drama, but it is important to know what is actually happening because it affects our lives. So get out and vote, and don't just stick your head in the sand and pretend you're just going to ignore this, because it does affect you. And if it doesn't affect you, it'll affect your children's children. And so we want to make a difference. And also, I'll leave a link below to Carlton's full video breaking down so that you can check that out. Now, your number one biggest expenses as an artist and musician, if you are not making $1 million a year from your music or from your business, let's just say you're making $50,000, then that means it is costing you $950,000 a year to not know. Okay, if it is your goal to make $100,000 a year and you're only making $50,000, that means every year the cost of not knowing how to make $100,000 is costing you $50,000 a year. You are paying what's called an ignorance tax. Okay, and so you want to get the information, you want to get the strategies. You know, you're watching this on YouTube right now. There is so much free game out there, right? There's so many coaches and mentors. So you want to get the strategies and learn about this stuff, because it cost me hundreds of thousands of dollars just not knowing about these taxes. You know, I remember one time we made a bunch of money and we went and paid off debt personally because we made it in the business, right? We made a whole bunch of money in the business, and then we took it out to pay down our mortgage because we're told, you know, debt-free, mortgage-free is the way to be. But when we took it out of the business to pay off the loan that was in our personal names, we were taxed at a rate that was like 20% when the loan was only like 4 or 5%. So you tell me in the comments below, do you think it's wise to pay a whole bunch of taxes at a 20% rate, or reinvest that into the business and then just slowly pay down the 4%, right? Because once you've paid that money in taxes, you can't get it back, right? Like sometimes you can submit certain things if you missed stuff in maybe about a year, but what you don't know is hurting you. And that's your biggest expense. It's the ignorance tax that everybody is paying. So you want to keep investing in your brain. It's the one thing that they can't tax, a divorce can't steal, a storm can't wipe away. You are the best investment that you can make. So keep investing in yourself.